Hope you're having a great day out there. We want to thank you so much for joining us, spending part of the weekend right here on Aspire to Retire with Ralph and Tim Short, the father-son team, and the financial advisors behind Welcome Home Financial Partners. You can go to the website, welcomehomefp.com, find out more about Ralph, Tim, the entire team at Welcome Home Financial Partners. Again, welcomehomefp.com, or you can give a call, 804-635-3550. Once again, that's 804-635-3550. We got a lot we're going to cover today on the show, but before we dive in, let me check in with Ralph and Tim. Gentlemen, good to be with you again. How are you today?
We're doing great, Chris. How are you?
Doing pretty good.
Doing well, thanks. I appreciate you guys taking time out of your schedule to spend with the listeners. Investments are what got people to where they are in retirement for the most part, and there are plenty of ways to invest your money, but financial author David Bach tells the Mel Robbins podcast that he sees two escalators to wealth.
They are real estate and stocks. You have to own real estate and you have to own stocks. And this market's now more rigged than it's ever been. And when I say rigged, what I mean is everything in our country is designed for those two asset classes to go higher. All the tax laws, all the incentives, all the opportunities that exist are for investors. If you're not an investor, you are being left behind faster than you've ever been left behind.
But if you're getting close to retirement, investing heavily in stocks can feel a little nerve-wracking, and being a landlord can sound like a second job. So are there other asset classes that can offer growth potential without taking on quite as much risk as the market?
Oh, absolutely. I mean, there's plenty of opportunities out there. And I think one of the biggest mistakes people make is believing that they have to choose between growth and safety. And the fact is that you can kind of spread things around and kind of do what you want. But, you know, there's a lot of folks now that, and I think it's kind of funny specifically in this area to where there's so many people that believe real estate is king. Well, the issue being is, yes, it's going to be another job. Yes, there's going to be cost to it. And we do realize that real estate appreciates, but if it's not liquid, what's it really doing for you? And specifically when it comes down to the ultimate question that we probably get at least 6 or 7 times a day of paying off our house in retirement, well, guess what doesn't stop? Because, yeah, it's nice. I mean, in theory, Chris, it's nice to not have that mortgage payment, right?
Sure.
But guess what you're still paying? You're still paying your taxes and your insurance. And it's going to get to that point where those taxes and that insurance bill is probably going to be the same as your mortgage is currently. So those are things that you got to pay attention to. But yeah, there's so many different asset classes out there. You got to take the time to see the opportunity. You know, if you could see that you're not going to lose money in the stock market when the markets are down, but we potentially could make a really good return when the markets grow. And it's not just the asset class of real estate or stocks. There's so many opportunities out there, but once again, you got to seek that advice. These are things that we talk to folks through, and people are accustomed to their TSP or their 401ks because they've done that for, 20, 30, 40, 50 years maybe. They're, I guess, comfortable with that because they know what they've experienced, and they don't seek other opportunities. And guess what? There's more opportunities in your 401k. There's more opportunities in your TSP. So these are things that we talk to folks about with our retirement roadmap process. We want to make sure that they see what other opportunities are going to be out there.
And I think, Tim, you'll agree, I don't believe there's anybody that's ever come into our office that didn't want the same thing, and that's a safe investment with high returns. They don't want to lose any money, but they want to make as much as anybody else. Sometimes, we tell people greed can get in your way in your retirement years or right before you retire. So you kind of need to figure out what you can get a safe return, and it grows, but you don't have to worry about the ups and downs in the market. I think a lot of people forget that money has different purposes, or some people call it a different job. You should have some money that's pretty safe, and so you can pay for your bills and the things that you want to do. That's called liquid money. Then you got to have some long-term money, which would be into growth potential with maybe in the stock market, but you don't want to have everything in just one basket. I mean, that's the thing that a lot of people need to understand. Even in your TSP or your 401k or anything like that, that's all probably pre-tax for most people. And now you're going to have a tax bomb a little bit later down the road. The thing that you need to understand is most people haven't been trained in trying to understand what the money game is all about. And that's kind of, as a fiduciary, we kind of sit down with people and say, all right, here is the amount of money that you have. You should have some money towards paying those bills and stuff that you're going to need some kind of income plan, because sooner or later when you leave work or in retirement, you got to figure out where your paycheck's coming from. Of course, you're going to have Social Security, maybe. Of course, if you're lucky enough to have a pension, you're going to have a pension as long as they last. But the rest of your money is going to be either investments from your 401k retirement account, or maybe your bank accounts, things like that. So that is what you need to have. You need to have a written plan to allow you to see where your paycheck's going to come from. And sometimes the safest investment, where you're not going to lose anything whatsoever, may not be the best investment idea you ever had. I mean, you could put it in under your mattress, but guess what's going to happen? You know where it's going to be, maybe, but it's not going to grow for you.
Right.
And last time I checked, our cost of living goes up every year, so you got to figure out how to make that paycheck bigger for yourself.
Yeah, and I make this joke, and I'll say this joke really quickly and move on, but there's only one thing that reproduces on a mattress, and it's not cash, right? So that's probably not the best strategy to try to grow your money. But I think the biggest question for most people is, how much can you afford to lose? People don't look at it that way, because while we're working, we don't need to tap into the assets, so it's a little bit easier. Not that anybody raises their hand and say, I want to lose money, but those are things that you got to ask yourself and figure out how to make all this money work for you and last for you. And there's so many misconceptions out there that hey, if we try to protect our money, we're not going to make any money. Well, sure, if you put it in your safe or you put it under a mattress or what have you, that's the case. High yield savings accounts, they've been talked about in the last 3, 4, 5 years because interest rates spiked kind of quickly, and the banks were paying you. But now look at your what you were getting 5% on a couple of years ago, you're probably only getting 3%, if that. So you got to pay attention to those things. And if your money's going to be stale, if it's not growing, then you're losing your buying power.
And I don't think anyone out there, the concept of income for life, I think, is pretty attractive to a lot of people out there. But income for lifestyle is really what it's all about, making sure that you can continue through retirement to afford the things that you enjoy, whatever it is that you want to do in your retirement. Does there need to be some money that is, more secure? Certainly, because the power company, the grocery store, they don't care if the market is down. You still have to pay for their goods and services. So you want that right blend. It's going to vary from person to person, but having a plan customized specifically for you, that is what the fiduciaries Ralph Short and Tim Short do for each of their clients in that retirement roadmap process. And if you want to find that right blend to have the growth that you'll need down the road and the protection that you'll need in the more immediacy, and taking into account taxation and all that as well, pick up the phone and set up a time to speak with them. Come into one of the 3 offices here in the Richmond area, 804-635-3550, or go to welcomehomefp.com. If you are getting closer to retirement, here's something that is worth paying attention to. A recent Allianz study said that 56% of Americans don't have an actual retirement plan. Not talking about investments, not a 401k, but an actual written plan. And that may be the real issue, because a lot of people have saved money, but they still don't know if they can retire or how that money actually turns into income, like we were just talking about. So why is it so important to have that clear written retirement plan, and how can it change the way that people approach retirement?
Well, it helps you answer the questions that most people have and what they worry about. I mean, we talk about 3 guarantees of life of death, taxes, and change, right? Retirement's going to be change, and you need to test drive that for that first year or so. But, a lot of people want to know if their money's going to carry them through retirement, right? So that's one big question that people have that written plan can kind of map out. But will your income last? And what about Social Security maximization? Ted kind of made the joke, I guess, a little bit earlier about Social Security still being there. And, these have been headlines for 20 years, and we have no idea where that's going to end up. But there probably will end up being some changes to that. But also, too, is, how much can you withdraw from your investments? You hear these rules of thumbs. You hear different talking heads out there that say 4% or 8% or 12% if things go perfect. And we don't live in a perfect world, so don't anticipate things being perfect, but you want to make sure that you've got answers to that, because if it's a rainy Sunday like it wasn't supposed to be a few weeks ago and it ended up raining cats and dogs at my house, and you're wondering about what's going on, well, you can always defer back to that plan instead of reaching out or what have you. So I think that's a really good place to start, is making sure that we've got those written plans. And we ask everybody that walks into our door is, do you have a written plan? And, Dad will answer the question, but, what do they pass over to us? And that's going to be that 401k statement. That's that TSP. That's their 403Bs or whatever. And it's like, okay, great. Well, that shows us your investments, but what's the plan? Well, what do you mean? This is what I've got. This is what's going to carry me through retirement. Okay, well, are you just going to start peeling money off a big pile of money, or are we going to have some strategies there? And that's where it's the deer in the headlights of, oh, I haven't thought about that. We don't realize, we do realize until we get there that, hey, we do have to make our own paycheck. It just doesn't click until we get to that point.
And I would say for most people, you just really need to have a written plan so you can see it in black and white, so you can remove any guesswork at if you take an extra $1,000 out of your retirement account right now, how's that going to affect you down the road? So I think the biggest thing for people to really understand through this conversation is mainly just don't hope that your income plan is going to maintain itself. You have a written plan so that in place so you can adjust it when things don't go the way you've had it planned. I think the biggest thing that saving alone, like Tim says, your statement is not a plan. It just shows you a point in time how much you're worth. And that does not say, can I take an extra $1,000 this month because I think I need to take my wife out on a nice dinner or a nice cruise, whatever it is that she wants to do, to maybe kind of soften things up. Maybe you did something stupid, Tim. You never know, right?
Speak for yourself, sir.
It does all come down to actually having that plan. And as an analogy, I think of going to the grocery store. I've been to the grocery store before. Just go, I need to run in, grab like 5 things and come back. I get to the house and I realize because I did not write it down, I forgot 2 of them. Have to go back out to the store. Minor inconvenience. When it comes to your retirement, if you don't have anything written down and you overlook something, taxes or Social Security, being penalized for making too much money in Social Security taxation, things of that nature, it's going to be a little bit more costly than driving back out to the store. So if you have a written plan in play, you can see where you are and, what the known commodities are. And if there are those changes on the road of life, as there will be, how do we get back on track? That is the beauty of that retirement roadmap that the team at Welcome Home Financial Partners puts together. And that begins with setting up a time to speak with them. Go to welcomehomefp.com, find out more about the entire team, schedule a time to speak with them, or give a call, 804-635-3550. Most Americans consider themselves middle class, but a Pew Research Center study says that the category actually covers a huge range of incomes from roughly $65,000 to $165,000. Retirement planning isn't really about income labels. It is about replacing the lifestyle you've built during the working years. How should people approach this? What mindset should they have?
Well, I was trying to remember the quote from, I think it was George Foreman, talking about what we just spoke on. And, I think it was a dream without a goal is merely a wish, something to that effect. Mm-hmm. And we actually, I should know this because we have that quote hanging up in our office, but I think that kind of goes back to the point of having that written plan is, okay, hey, maybe you do have goals. I think we all have goals to a point. But if you don't have the plan behind that, you're just wishing, right? So, but back to the income question, there's a lot of people that think their expenses are going to change in retirement. And yes, that's going to be true because you're going to do things different. If you live life differently day in and day out, expenses will be different. We don't know if it's going to be more. We don't know if it's going to be less. Obviously what we've been dealing with the spike of oil prices, well, guess what? We all feel it when we go fill up, unless you don't have a gas-powered vehicle. So I think one of the things that you got to pay attention to that most people don't is while we're working, there's some different things that we are having to pay for, right? FICA tax, if you're self-employed, self-employment tax, factor in your contributions to different retirement accounts. So obviously you don't see that money coming to you on a weekly or biweekly or monthly basis. So, your income level might not necessarily be the same, but also you've got to pay attention to the fact that you should be having some more time, and that might require more expenses for more fun things. So cruising, taking those trips through the United States, there's a lot to do with that, especially we just went through the 250th birthday of the country. Well, obviously there's been a lot of things that have been going on in the States to pay attention to and, spark some interest. And maybe, hey, we're going to drive to West Virginia because they were having this XYZ parade or whatever the memorial thing would be. And, those are things that you've got to pay attention to. And that's why I think, the retirement roadmap process that we put together kind of shows, what the taxes are going to look like, what your expenses currently are going to look like, but also what they're going to look like in the future. But keep in mind that those are always subject to change based on how you're living your life. But inflation is going to be in there, and I think that's one thing that's often overlooked of, well, if I'm spending, $100 a month in car insurance now, that I think in 10 years it's going to be maybe 110. No, what we've been dealing with over the last few years, it has been dramatically spiking. So there's just a lot to do with that, but, we've kind of bashed on Social Security so far today, and Social Security could have a big role in if they do reduce benefits. If you're already collecting and they reduce it 25%, well, we probably aren't going to take a 25% decrease on our lifestyle. We're going to have to pull some more money out from our investment.
Right.
So a lot of things to pay attention to there.
Yeah, and I don't think everybody needs to have 100% of their paycheck. Is there a certain number for everybody? Is there a rule of thumb? Not really. But do you know what you're going to need? Most people don't, and that's like Tim said, that's what we go through in our roadmap process because it's a very detail-oriented cash flow of your expenses, your income, your tax piece of it, and vacations and things of that nature, what you want to do. So you may need 100%, but you may need 50% because you've done such a good job of saving that you don't have to worry about it. But I think the biggest question for most people to understand is not how much money do I have, how big is my 401k or TSP or whatever it is that you have, but how much can I safely spend without running out of money?
Shifting the ROI from return of investment to reliability of income in retirement, because that's what you're going to need for life. And it's not to say that it's going to be the same every year. Some years you may travel more. Some years there may be more medical expenses. Some years it's like the working world, but just not understanding it is going to vary. What you have coming in now could change from year to year. It could change down the line where you do downsize and you see a reduction in the income that you need, or it could be the opposite direction. That is why having a plan in place is important, because then you can go back and make those changes. Like with a roadmap, if you veer off course, you take a look, you pull it out, and you figure out how to get back on course to where you want to be. You can start building that retirement roadmap again. Finding out more about Ralph and Tim Short, the team at Welcome Home Financial Partners, over there on the website, welcomehomefp.com. You can give the call, schedule a time to come in one of the offices, 804-635-3550. Complimentary visit into that office, I want to go ahead and mention. So we talked about market risk. We talked about taxation and health risk throughout the history of the show. One of the hidden dangers of retirement is that, well, you're going to be spending a lot more time with your spouse, and sometimes that doesn't end well. Divorce rates for those over 65, unfortunately, they are rising dramatically, which may mean a very different retirement for both parties. It's a thing called a gray divorce. Is this an issue you've seen, and how do you help mediate that without things getting ugly?
Well, we often make the joke that we need to have sofas in every one of the conference rooms because sometimes we have to be therapists as well. Mm-hmm. Now, none of us went to school to be a therapist, nor do we want to, but obviously there is the financial side of retirement, but then there's also the emotional side of retirement. I don't know if I've said this story before on this show or not, but I was working with a person who called in from one of our television shows, and he came in by himself. He was married, obviously. Both of them been working for, I think it was over 40 plus years, and they were looking to retire at the exact same time. And I looked at him and I said, wow, you're tackling a whole lot of change immediately, aren't you? And he goes, well, what do you mean? And I was like, well, how long did you work? And he said 40 plus years. And I said, and how many hours did you work? Over 50 a week. It's like, okay, well, now you're going to spend that 50 plus hours a week now with your spouse. Are we sure that this is the correct strategy? He went home and called, said, I'm going to postpone my retirement for about 5 years. I'll see you in about 5 years. So it wasn't good that I talked him out of becoming a client, but on the same token is those are things that you do have to pay attention to because you've got to fill your time. And obviously, if you are married, that's going to be a lot more time with your spouse. We don't want to get divorced in retirement, but there's a lot of people that end up seeing this because there's a lot of things that are going to come up. You got to make sure that you are aware of that and not be blindsided because once again, These are things that people know are going to happen, but until reality kicks in, they don't necessarily know how to feel about the situation, right? So I think making sure that both spouses are on the same page generally helps. And everybody's going to work a little bit differently, and some people will keep things separate. Some people go all in together. But I think when it comes down to the financial side of retirement planning, it's good for both spouses to be included. Mm-hmm. So it makes it a little bit easier. But these are definite things that people have to focus in on, because the last thing that you want to do, I would believe, at least I'll speak for myself, is when I get to retirement, I don't want to get into retirement and now I'm all alone because my wife couldn't deal with my stuff for 40 or 50 hours extra a week.
Well, I'm going to say it to you this way. The good news about all of this we were talking about is divorce may change your retirement, but it doesn't have to ruin it. But you do need to have a right guidance. You need to have a right plan, because what you had planned before the divorce is probably not going to be the same. Mm-hmm. I think another thing that you need to be aware of is, if you're not paying attention to what could happen to you in the divorce, you might be able to split all that retirement accounts between the two of you, and you resolve those issues. But guess what? There's going to be some things that might happen that you didn't know about, and you didn't take care of it because nobody told you needed to roll that money out into a qualified plan. They just wrote you a check for it, and all of a sudden, I can tell you from experience with clients that they got a big surprise when they didn't answer all that paperwork that came to them about the Quadro, and all of a sudden they're having to pay income tax on an extra $250,000 that year.
Oh. And again, it's about understanding that these changes will happen, whether it is a divorce or tax increases. Being able to have a plan to fall back on, and sure, in the case of a divorce where you're splitting a household, you may have to rebuild the plan from the ground up, but at least you have a baseline to start from. It is one of those things where I'm actually reminded, Tim, as you were telling us the story, a coworker of mine did retire, and his wife wasn't retiring, but she worked from home. She had worked from home in her retired career. So I said, well, now you're going to be spending a lot of time together. I think we'll be fine, is what he said. 3 weeks later, he kept calling me like daily, asking me if I wanted to grab lunch. So that situation, it does happen. And you advising that prospective client, I guess, on what life would look like, I don't think that actually falls in the fiduciary capacity, but that was you telling him what he probably needed to hear versus what he wanted to hear, things to take into consideration. So there is a lot that goes into it, and I don't think anyone really plans on getting divorced in retirement, but having a plan in retirement. Setting up a time to speak with the team at Welcome Home Financial Partners, 804-635-3550. Okay, Ralph, I know you're super excited about this one. California voters are set to decide on a tax on billionaires come November, and it goes deeper than you might think. Tax advisor Andrew Katzenstein tells Fox Business he is hearing plenty from clients.
It's actually a 5% tax, not on their income, but a 5% tax on their net worth. And to them, it just seems like a bridge too far. People are used to paying income taxes, but when you start to invent new ways to tax, it really just rubs them the wrong way.
And look, nobody can predict where taxes are headed. I think we all can assume up at some point. But how do you build a retirement plan that can actually adapt to whatever changes the lawmakers throw our way?
Well, that's true. I agree 100%. They start coming up with different ways of taxing folks, and it's just going to be spread down the line. I mean, if people think they're going to stop at billionaires if this happens, I mean, none of us sitting at the table are billionaires. Sorry, I threw everybody's business out there. But, I think it's important. You've got to build some flexibility inside of your retirement planning, because none of us know what Congress is going to do or any of the governmental bodies are going to do over the next 10 or 20 years, or hell, 20 days. We just have no idea. So I think it's important to focus in on that, because yes, we know tax rates are permanent, but they're only as permanent as current administration. We always know how that's going to work out, right? So we've got to make sure that we just don't make everything linear and say, well, we know we're going to be in the 12% tax bracket for the next 30 years. What if that pops up to 40%? So, there's a lot of things that go into that, but, start getting rid of some of the taxation now, because we know where we are now.
Right.
We don't know what the future holds, but if we can capitalize where we're at currently, it's going to build in that flexibility to where, hey, instead of 12% that you're paying today, and it's 50% in 5 years, or hell, what if they tax all of us Main Street people 10% on our wealth? Then what's going to happen? So that's why it's very important to start kind of getting away from the tax burden now rather than wait till later.
I think people really need to understand that the government does not produce anything. They just collect money from us to do whatever they want to with it. And I don't believe that we would agree with what they're doing with the money is in their best interest. But I think the real lesson from all of this is that you need to control what you can control. The only thing that you can do when it comes to politics is go vote whichever way you want to go.
Right.
You can't control what they're going to do after they get in office. You can't control what they're going to do about the tax bills. I mean, think about it. We probably will never get into the billionaires club, except probably for Chris, because we know what he does. But just as important as an income plan, you need to have a tax plan.
Right.
You need to understand that you're going to have you can have tax-free income, you can have taxable income, and you can have tax-deferred income. So the things that you need to understand is, let's take a look at how we've got our investment structured to work out those plans so that when taxes go higher than they are today, then you might need that tax-free income so it won't affect you quite as much. I think the bottom line to all this is billionaires are always going to make the headlines, whether it's Elon Musk or whether it's Chris Swan or whoever. They're going to make the headlines. And you just need to ask the same question. Am I paying too much for taxes? That's what you need to focus on. Don't worry about somebody else. Worry about yourself.
I have a cousin out in California who is actually named Chris Swan, so I'm pretty sure you were talking about him and definitely not me. But, we talked about market risk earlier and how, you don't really want to withdraw from a down market because that is realizing a loss. Here's the thing with the market. It's going to go up and it's going to go down. We know that. When it comes to taxes, if you are not prepared and you have to write what they ask you to pay, their quote unquote fair share, that money's not coming back. That money is gone for them to allocate for whatever they want to do. So it makes as much sense to have a tax plan as well as an income plan, as well as a healthcare plan, as well as, here's the thing, you're going to need all of it in retirement, honestly. And that is what the team at Welcome Home Financial Partners helps clients tackle each and every day and make sure they can continue on the road to, through, and beyond retirement. Here's how you get started. Pick up the phone. Schedule a complimentary time to come into the office, one of the 3 offices here in Richmond. The number is 804-635-3550, or you can go online to the website, always available there to set up a time, welcomehomefp.com. As always, want to thank you for joining us, spending part of the week right here, kicking off the week right here on Aspire to Retire with Ralph and Tim Short. Hope you have a great week ahead of you. Take care of one another out there. Gentlemen, hope you have a great week as well. As we wrap up, I want to leave you with the final word.
Thank you, Chris, and thank you to your cousin. Hopefully he's listening and got that huge shout out earlier. But, we just talked about taxes, and there's been so many rule changes when it comes to taxes over the last few years, and there's probably going to be more to come. And this potentially could be one of the biggest bills that you have in retirement. So it's important to address it as soon as you possibly can. So if you're listening to it out there and you've got some questions on RMDs or Roth conversions or what your taxes are just going to look like in general, give us a shout, give us a call. We'll bring you into the office and kind of map that out for you and come up with some strategies. But I think that's very important to tackle. And once again, it is much better to tackle it now than it is to tackle it later because we know where we are right now. So once again, we want to thank everybody for listening and take care.
All content is for information purposes only. It is not intended to provide any tax or legal advice or provide the basis for any financial decision, nor is it intended to be a projection of current or future performance or indication or future results. Opinions expressed herein are solely those of Welcome Home Financial Partners and Welcome Home Wealth Advisors, LLC. The information contained in this material has been derived from sources believed to be reliable, but is not guaranteed as to accuracy and completeness and does not purport to a complete analysis of the materials discussed. All information and ideas should be discussed in detail with your individual advisor prior to the implementation. Each individual investor's situation is different, and any ideas provided may not be appropriate for your particular circumstance. Advisor services are offered by Welcome Home Wealth Advisors, LLC, a registered investment advisor in the state of Virginia. Being registered as an investment advisor does not imply a certain level of skill or training. Insurance products and services are offered through WPI Holding, Virginia Insurance License Number 138509, an affiliated company. The information contained herein should in no way be construed or interpreted as a solicitation to sell or offer to sell advisory services to any resident of any state other than the state of Virginia or where otherwise legally permitted. Welcome Home Wealth Advisors, LLC, and Welcome Home Financial Partners are not affiliated with or endorsed by the Social Security Administration or any government agency.